Talking about IT, let me welcome on board Apurva Prasad as well as Sandip Agarwal to talk about what they've made of TCS's numbers and what they anticipate for the rest of the sector going forward. Apurva, Sandip, both of you, hi, morning. Thanks for taking the time out and joining in. Apurva, what next from TCS and what is it that you've made of the commentary? Are you getting any hint that they're out of the rough seas?
Uh, I think it's a bit of a mixed thing because there's some kind of a contrast there. So while the second quarter revenue performance seems to be subdued, but it's getting more than offset by, or at least offset by the bookings number that came through and the operational performance also, despite a flattish trajectory. So I think there's sort of contrasting factors, some elements that worked, some that didn't. It sort of nets off to not significant change in terms of how we were assessing TCS.
Sandeep, looking at how the environment is shaping up, are you getting a sense that at least the top 3-4 large companies, IT companies in India now are getting into a structurally slower groove of growth, which we saw, say, perhaps compared to what we saw in the last decade? Is that a risk?
No, so I think, this probably we are getting carried away by the last 3-4 quarters numbers because, you have to accept the fact that most of our business, 60-70% business comes from the developed markets, particularly the US. And in US last 4 to 6 quarters, there has been continuous talks of a hard recession, soft landing of recession, sometimes hard landing and all these things. And in this kind of environment, every business, every corporate, every enterprise, what they try to do is they try to spend what is essential and they try to postpone what is not so essential and could be postponed. So that cycle is going on, and that is what is clearly reflecting in all the large IT companies. In fact, I think the other way. In my view, digital is today indispensable for everyone. Technology is indispensable. The technology spend as percentage of revenues are going up across the globe for most of the companies. So I believe there is a strong structural uptick in the demand environment. It has been temporarily stopped because of recession fears and all the global uncertainties which we have seen in recent past. I think this kind of situation where you see a decline in revenue, these are always, and you can go and refer to history, always signs of bottoming out. Deal data is very strong. Anyways, H2, no one has much expectation because H2 is cyclically and seasonally a weak half. So I think, people are now looking at FY25 and FY25 seems to be very promising. Even large companies like TCS, we are expecting 8-9% kind of growth, and depending on the size of the company and how they are positioned, the growth can go up to 17-18% for the smaller names. So with that growth and some aid from rupee, USD rupee conversion, and also the sharp fall in attrition, we expect a better PAT growth. So I think these stocks have undergone time correction and some price earning multiple correction. So they are now in sweet spot. I don't expect a much decline from here. In my view, investors will come in and buy these names in next 1 or 2 months. That is what my sense is.
Sandeep, morning. Just for TCS in particular, what's the outlook when it comes to the margin? While the management wasn't too forthcoming in terms of an overall guidance, do you think that 25% EBIT margin could potentially be hit down the line? And where is it, or what is it that you think would be those drivers for margin growth?
So see, while people count price as a margin lever and growth and all that, but last 22 years experience of myself in the software industry, I can tell you the biggest margin driver is always a stable manpower, because this industry is purely dependent on manpower. 60% of the cost is employee cost. So if you always lose the track, or you always give up margins when your employees are unstable, and you always make better margin when employee stability comes back. So we are seeing employee stability coming back after like 7-8 quarters. So if you recall, post-COVID, while growth remained high, but margins were continuously falling because of sharp jump in attrition. Like, it was decadal high attrition. Now we are coming back to pre-COVID kind of attrition, and hence margins are slowly expanding. Now the thing which needs to come is slight bit of growth back. And when that happens, then operating leverage plays out in full firm, and you will see better PAT growth. So I think, the main lever of margin is controlled attrition, which has happened already. And I think in next 1 or 2 quarters, they will achieve 11-12% attrition, and that will be very good for margins.
Right. So, Sandip, just wanted to get your sense, because there's Infi and HCL Tech as well next, right? What's the anticipation and expectation from there? Do you think what TCS did is pretty much a trend that one can foresee for the rest of the IT pack too, or do you think there could be some outliers?
So it cannot be much different, because what we have seen, particularly in case of TCS result and based on the commentary, the consumer discretionary space is undergoing some weakness, and which is very natural, because if you see last 5-6 quarters, there has been uncertainty in US, and continuous rate hikes are happening. So there is cut down in discretionary spend, and when there is a cut down in discretionary spend, obviously all the budgets also see a cut, depending on how indispensable they are. So I don't see a very different number from, see, there could be some beat versus expectation, but I don't see a runaway number from anyone. This is going to be a little soft quarter, but what I will be more excited and more enthusiastic to see is what is the order book. So in my view, order book for everyone should be very, very good, and attrition number should come down. If that is happening, then maybe in 1 or 2 quarters, you will see a big bounce back in the fundamentals of all these companies.
So order book growth and attrition levels, how they pan out will determine how these stocks will actually be treated by the markets, as per Sandip. Apurva, if one were to, in the pecking order of your preference, the top 3 names, TCS, Infosys, HCL Tech, even LTIMindtree, how would your preferences look like in terms of valuations?
I mean, see, our preference within the large caps, and if I'm including LTIMindtree within that, that's the one that we would prefer from an absolute upside potential near term. But after that, we do like an HCL Tech, TCS, Infosys, in that order, and we're not as upbeat on Wipro and TechM. So that is roughly a pecking order.
May, just to take off from what we were asking Sandip about in terms of the fact that there is that anticipation that there could be a subdued demand environment, the US recessionary fears, etc. Is there a sense that we could see things improving, or is that potentially, or concerns of the recessionary fears, etc., likely to weigh down on IT companies as a whole going down into the second half of the year?
No, we do expect improvement. Now, whether it happens, say, second half, Q3, or it starts Q4, or it gets a bit more protracted, I think that's probably more a near-term debate. But I do agree with Sandip's earlier comment that the bookings number, that itself gives a lot of confidence of a much stronger exit. I think that's the key aspect. Apart from that, some of the operational elements have also become very favorable for the sector. So effectively, what's happening is your cost of replacement is coming down, is lower than the existing cost base, which is a good sign. So look at a scenario where the sector growth rates have decelerated from 12-13% to this year 4-5%. Margins are still sort of holding up. So I think that aspect could probably improve further with some operating leverage as that comes in the next couple of quarters. But yeah, I think deal bookings would probably be the key highlight, and we do expect even TCS and HCL Tech to report very strong deal numbers.
All right. Good to have you both on board. Thank you so much, both Sandip as well as Apurva, for giving us a sense as to what we can expect from the IT sector in terms of attrition, hiring, demand environment, and of course, the quarterly numbers. That's the IT space.